So I have a little bit of a warm spot in my heart, I'll be honest. Yes, I have a warm spot in my heart for TikTok because I won youth by 34 points. There are those that say that TikTok has something to do with that. Now, we won youth. Republicans are always 30 points down in youth. I don't know why, but we ended up finishing. There was one poll that showed us down about 30. We were 35 or 36 points up with young people.
The possible ban on TikTok in the United States is making headlines again. With 170 million American users and countless hours of engagement, TikTok isn't just another app, it's a cultural phenomenon. However, its ties to ByteDance, a China-based company, have raised significant concerns about national security and data privacy. Now, the U.S. Supreme Court has agreed to hear TikTok's appeal against a law that could force its sale or lead to a ban by January 19th. TikTok is pushing back, citing First Amendment violations. Time is running out. This controversy is more than just politics. It's also about the immense business opportunity created by TikTok's potential absence. If the app is banned or forced to sell, other U.S. companies are well positioned to fill the void. In today's video, we'll explore who stands to gain the most from this shakeup and what it could mean for investors looking to capitalize on this moment. TikTok has been accused of potentially sharing U.S. user data with the Chinese government through its parent company, ByteDance. While TikTok has vehemently denied these allegations, the perception of risk remains. The U.S. government argues that ByteDance's ownership could pose national security threats, which has led to bipartisan support for measures to restrict or divest the platform. This debate isn't happening in isolation. It is part of a larger economic rivalry between the U.S. and China. From trade wars to bans on technologies like Huawei and export restrictions on critical materials, tensions are high. Legally, the stakes are significant. ByteDance argues that the law forcing a sale violates free speech protections under the First Amendment and sets a dangerous precedent for government intervention in tech. On the other hand, proponents of the ban believe that safeguarding U.S. data outweighs such concerns. Whatever the outcome, the January 19th deadline looms large. If TikTok exits the U.S. market, the question becomes who will step in to claim its 170 million users? Among the top contenders to benefit from TikTok's absence is Meta Platforms. Meta already owns two of the most popular social media platforms in the world, Instagram and Facebook, both of which feature short-form video content through Reels. Without TikTok, creators and users could flock to Reels, significantly boosting engagement and ad revenue. Instagram Reels alone boasts over 2 billion monthly active users, and Meta has been fine-tuning its AI algorithms to improve content discoverability. For investors, Meta's stock has shown resilience this year, driven by cost-cutting measures and a renewed focus on its core business. A TikTok ban could further strengthen Meta's position in the $250 billion social media advertising market. Another major player is Alphabet, the parent company of YouTube. YouTube Shorts has emerged as a strong competitor to TikTok, with over 70 billion daily views. Alphabet's vast resources and established brand position, YouTube Shorts as a natural alternative for creators and users if TikTok is banned. Alphabet's diversified revenue streams, including dominance in search and cloud computing, make it a safer bet for investors compared to smaller competitors. A TikTok exit could significantly boost YouTube Shorts' growth trajectory and solidify Alphabet's position in short-form video content. Snap, though smaller in scale, could also benefit. Its Spotlight feature targets the same Gen Z and millennial audience as TikTok and already has 400 million monthly active users. While Snap has faced financial challenges in the past, a TikTok ban could redirect advertisers and users to its platform. However, Snap remains a higher-risk investment due to its smaller size and profitability issues. Pinterest offers a slightly different angle. Though not a direct TikTok competitor, Pinterest has been growing its video content, particularly in categories like DIY, fashion, and recipes. Video views on Pinterest increased by 60% year-over-year in Q3 2024, signaling the platform's potential to attract TikTok creators focused on niche content. For investors, Pinterest represents a more niche opportunity, but one worth watching as it continues to evolve. Finally, Apple and Google stand to benefit indirectly as gatekeepers of the App Store ecosystem. A TikTok ban would likely increase engagement on other apps available in their stores, such as Instagram, YouTube Shorts, and Spotlight. Both companies take a cut of in-app purchases and advertising revenue, meaning a shift in user behavior could enhance their ecosystem-wide earnings. Despite the opportunities, there are significant risks to consider. A TikTok ban could set a precedent for broader tech regulation in the US, potentially impacting major players like Meta and Alphabet. Investors should also consider the geopolitical ramifications. China could retaliate by imposing restrictions on US companies operating within its borders, such as Apple and Tesla. These escalating trade tensions could introduce uncertainty into global markets. Market dynamics also pose a challenge. While many TikTok users may migrate to US-based platforms, some could explore alternatives outside the US, such as Byte from Canada or Chingari from India. This fragmentation could dilute the potential gains for US companies. Investors need to weigh these uncertainties carefully before making any decisions. Meta Platforms, trading at a price-to-earnings PE ratio of around 20, looks relatively undervalued given its strong growth potential. For long-term investors, Meta appears to be a solid buy. Alphabet, with a PE ratio of about 27, offers a diversified and resilient business model, making it another attractive option. Snap, while high risk due to its lack of profitability, could deliver short-term gains for speculative investors. Pinterest is better suited as a hold for now, but its evolving video capabilities make it an intriguing prospect. The potential TikTok ban is more than just a legal battle. It's a pivotal moment in the global tech landscape. While TikTok fights for survival, US-based companies like Meta, Alphabet, Snap, and Pinterest are preparing to capture its audience. For investors, this situation represents both risk and opportunity. As the January deadline approaches, keeping an eye on developments will be crucial. Meta and Alphabet are well-positioned for long-term gains, while Snap and Pinterest offer speculative upside for those willing to take on more risk. What do you think? Will TikTok survive the US market? And which stock are you betting on as the next big winner? Let me know in the comments, and don't forget to like, subscribe, and hit the notification bell for more market insights.